Friends, today we are going to start the problem solution on this very particular chapter, that is your working capital management. This is the second class and I hope you have gone through the questions. So before starting with the answer, I like to bring before you one of the most important thing about the depreciation. All of you know that depreciation a non-cash expenditure. Non-cash expenditure. So when working capital is determined, the depreciation is not taken into consideration. What is the purpose? Purpose 1. Working capital is determined to find out the cash liquidity of the organization. Working capital, so first objective is cash liquidity. This is the objective. Another one, bank finance. So when a working capital statement is submitted to the bank finances as working capital loan, that is called cash credit, bank overdraft, short-term loan. And this short-term loan is given for cash expenditure, for cash requirement, and depreciation is a non-cash expenditure. So when the bank finances, it finance on the basis of cash expense requirement. So depreciation is not considered in calculation of working capital requirement. This is first one. Second one, there are two concepts of working capital. One is called gross working capital. Gross working capital. So gross working capital means it is only the total of current asset. Total of current asset is called gross working capital. Another one is your net working capital. Net working capital. Net working capital is referred as CA minus CL. CA minus CL. So current asset minus current liabilities. This is your net working capital. So with these fundamentals, let us start with the problem number 1. I hope you have gone through the problem, because before starting the problem, you should know the questions. It will be easier to understand. If you have not gone through the question, please go through the question, write it down and compare with the answer, you will understand better. So let us start with the solution. So this is the management of Gemini Limited has called for a statement showing the working capital needed to finance a level of activity of 3 lakh units of output for the year. The cost structure of company's product So annual output, note 1, this is annual output as given in the question. The annual output is 3 lakh units. 3 lakh units. And if you read the question, you will see the raw material stock, work in progress, all these things are maintained on the basis of month's requirement, right? So we will divide this 3 lakh by 12 so that we will find out the monthly requirement. Sometimes in the problem they are giving finished goods 4 weeks, data that is 6 weeks, like that. In that case, we will divide the annual output by 52 because the year contains 52 weeks, so that we can find out what is the weekly sale, consumption or production. So friends, here the requirement is on the basis of months. So we shall divide this to find out the monthly production. So monthly production, this is 3 lakh divided by 12, it comes to 25,000 units. This is your monthly production. Let us come to the next one. Here it is telling the past record indicate raw materials are in stock on an average for 2 months. So raw material is in stock for average 2 months. So what will be the raw material? This is note 2. This is your raw material stock, or you can say this is inventory of raw material. So how much is the inventory of raw material? That is 2 months stock. So if you take 2 months on an average 2 months, then we have to take 2 into 25,000 into the raw material per unit rupees 20 into 20, it comes to 10 lakhs, right? So 2 into it comes to 10 lakhs. So raw material requirement is 10 lakhs. Then comes the work in progress. Work in progress approximately half month production. Friends, I am telling you, work in progress means the work is not completed. Suppose you are going to make a furniture. When the carpenter came, before that you have to purchase the total wood necessary, right? And if the job is incomplete, there you will see the wood have been purchased total, but labor and overhead are partly used in case of work in progress. So in case of work in progress, the key principle, I am giving you a note here, work in progress, unless otherwise stated in the problem, we have to take raw materials 100%. That means full supply of raw material in work in progress. But other expense like labor, wages, 50% requirement, the 50% of the requirement, and overhead also 50% of requirement. So this is raw material is 100% supplied in case of valuation of work in progress. But in case of labor and wages, we will consider 50% of requirement. Here there is a logic. The logic is that if the degree of completion of work in progress is not given, how much finish that has not been given, we assume that the work in progress means 50% complete. So we take the raw material 100%, labor and overhead other expenses are taken at 50% of requirement. This is the principle. However, in some problem they tell you that is labor overhead 60%, material 80%. In that case, where they have specifically telling that work in progress material 80%, labor overhead 60%, you please take that one. So if nothing is given in the problem, then please note it down that raw material 100%, labor wages 50%, and overhead 50%. So based on this, we can do the valuation of work in progress here. Work in progress have been given half month. So in case of work in progress, let us take the raw material. Raw material fully supplied, half month into 25,000 into 20, this comes to 2,50,000 as your raw material, right? So 2,50,000 is your raw material. Now labor, direct labor rupees 5 per unit. So direct labor rupees 5 per unit, half 25,000 into 5 into 50%, because it is half complete. It comes to 31,250. Then comes the overhead. Friends, overhead in this problem has been given on the basis of number of units, each unit. The overhead has been given as 15 rupees per unit, including depreciation of rupees 1. So since depreciation is a non-cash expenditure, so overhead, cash expenditure overhead will be 15 minus 1, that will be 14 rupees. So cash overhead will be 14 rupees, cash overhead. because it contains non-cash item depreciation 15 minus 1, that is 14 rupees. So 1 by 2 into 25,000 into overhead is 14 rupees per unit into 50%. It comes to 87,500. So it is 87,500. So this is the valuation of work in progress, right? Total work in progress will come to 3,68,750. This is your work in progress. I think all of you understood. This 14 rupees, 15 rupees is the overhead, 1 rupee is the depreciation. So we have taken the cash overhead as rupees 14. So half month and 50% here, it is 100% we have taken, and this is the valuation of work in progress. Then we will come to the valuation of your finished goods. So finished goods on an average for a month. So finished goods remain in a warehouse on an average for 1 month. So when we will value the finished goods, 4 is the valuation of finished goods. And these finished goods are taken on an average for a month. This is 1 month. So the things will be very same. Only the half will not be here and 50% will not be here because it is 1 month. In case of finished goods, raw materials, we have to take 25,000 into 20, that will be 5 lakh. This is your raw material. Direct labor, 25,000 into 5 into here also into 1 because 1 month is here. Here also it is 1, that is 1,25,000. Overhead is rupees 14 per unit, 25,000 into 14 into 1. Total comes to 9,75,000, right? And this is 3,50,000. So total 9,75,000 is your finished goods. Then supplier of material extend a month credit. Supplier of material, they are giving 1 month credit, that is your trade creditor. So trade creditor is 1 month only, and creditor comes from the purchase of raw material, and raw material is rupees 20 per unit. So trade creditor, they are giving extend a month's credit, 1 month. 1 month. So it comes to 25,000 into 1 into 20. So this will be your 5 lakh. So creditor will be rupees 5 lakh. Then let us come to 2 months credit is normally allowed to debtor, right? So debtor is, that is customer. Customers are paying once in a 2 months. They are giving 2 months credit. So in case of debtor, we can calculate the debtor on the basis of cost and on the basis of sales price. But when the bank finances the working capital, they ask you to find out the cost of the debtor, because they want to finance based on the cost requirement, cash cost requirement. So we shall do the problem based on the debtors at cost equivalent. That means we will not consider the profit. However, some books, they have done the debtor on the basis of sales price. Most of the books, they have done the debtors on the basis of cost price. And we shall give a note in respect of debtor on the basis of sales price. However, let us calculate the debtor on the basis of cost price. So if we calculate the debtor cost equivalent, in case of debtor, the credit period is 2 months. So finished goods is 1 month. The debtor will also be calculated on the basis of your just like the finished goods. If you want to calculate debtor on the basis of cost, so the finished goods is for 1 month. Here we multiply 1, here we multiply 1, here we have multiplied by 1 to find out the finished goods. In case of valuation of debtor, we have to multiply by 2, here also 2, here also 2, right? So each raw material will be 2 months, direct labor will be 2 months, overhead will also be 2 months. So in short, we can calculate 9,75,000. This is for 1 month, and we can calculate by 2 to find out the total debtor. So 9,75,000 into 2, that will give you 19,50,000. This is the cost equivalent of debtors. So friends, again they are asking, the cash balance is 25,000. So these are the 6 items we require for the statement of working capital, right? So after finishing all these workings, we shall prepare the working capital statement. So let us start with the working capital statement. Right? Statement of working capital. Raw material, that is current asset. Raw material, that is 10 lakhs. Work in progress, that is 3,68,750. Finished goods, comes to 9,75,000. This is your finished goods. Then debtor at cost. So debtor at cost is 19,50,000. Then cash is given in the problem. Cash balance, minimum cash balance 25,000. So 25,000 is the minimum cash balance. Total current asset. This total current asset is also known as your gross working capital. $43,18,750. This is your total current asset. Then comes the current liabilities. Current liability, only one item is here, that is your trade creditor. Trade creditor. This is only 5 lakhs. Right? This we can say B. Now net working capital. Net working capital. That is A minus B. This will be 38 lakh 18,750. 38,18,750. So raw material, work in progress, finished goods, debtor at cost, cash, total current asset less trade creditor. It comes to 38,18,750. So this is your answer for this question, right? So we will again go for the problem number 2 in the next class. Friends, if you like the video, please subscribe and offer your comments. Just like the leverage, we will be taking here the lot of classes, and all classes we will solve the problem. You have been provided with the theory notes, question with answer in the first class, so you can refer to the earlier class as well. Thank you for watching.